Well, good afternoon, everyone, and welcome to Richey May's quarterly webinar where we're going to be discussing the best practices for preparing for a successful audit and tax season. My name is Kurt Blom in Richey May's Business Advisory Services, and before we dive into today's presentation, I just want to go over a few housekeeping items. First, for optimal audio, all the participants' phones will be muted during the presentation. We will have a Q&A session at the end and do encourage your questions. And anytime during the presentation, you can submit a question by using the question box feature. And also, just to let everybody know, we will be posting the presentation to our website afterwards in case you want to share it with others or there was something else that you wanted to go in and see. So to kick it off, I'd like to introduce today's presenters, Natasha Thompson and Gina West. Natasha is an audit manager with Richey May, and Gina is also a tax manager with us. So with that being said, we'll go ahead and kick it off, and I'll hand it over to Natasha.
Thanks for joining us today. I know that you guys probably feel like you never get away from an audit or tax conversation. We're always bugging you, and it's true. But we like you guys, so that's why we're talking to you. So I want to just kind of go through some best practices that make it a little bit easier on both ends, ours and yours, so that you can feel like you've had a successful season without pulling your hair out. So we want to talk about the best practices, things that can help mitigate surprises. So it's not March 25th and you're just hearing about an adjustment or a change to your tax return that is a surprise. We want to prevent that. And why now is the most critical and productive time of the audit and tax season. So the first thing, and probably the best thing you can take away from this presentation, is that regular communication with the audit and tax team is critical to the successful completion of the audit and tax returns. We want to hear from you. We need to know what's going on in your business so there aren't any surprises. It also ensures that you know what to expect from us. It's a two-way street, and we want to make sure that you're fully aware of what we need and we're fully aware of what you need and what's new in your business. So many of you I know are familiar with the stages of the audit because you've been through it many times, but I just want to break it down and talk about each of them real briefly, and then we'll dive into the best practices for each part of the stages. So the first part is planning. This is primarily done behind the scenes at Richey May. This is where we gather our request list, we put together questions for you, we send you our request list, and we make selections. The next phase is when it leads into preliminary fieldwork and compliance. Typically, we'll schedule your preliminary fieldwork and your compliance testing so that you're aware of when we are going to need your time, when the requests are due to us, etc. But this is probably the most critical time to prevent surprises. This is the phase where we test specific transactions. We also perform walkthroughs of internal controls. We will draft your financial statements and be able to share a draft with you so that you're able to see the format and the content and provide us feedback early rather than having to do that during a busier time, January through March. So compliance, sometimes this can be sort of a thing that will slide to the side for many of us. I think probably most of the people on the webinar, you know, in the financial world, we're CFOs, controllers, and so compliance is a whole separate department, and it also feels like it can be out of our control. But this is really an integral part of the audit. We issue 2 opinions for HUD on compliance, so it really is important to your overall financial statements. You can also think of us coming in and doing the compliance testing as a test run before any regulators come in. It's a great way to identify any weaknesses or anything that could be going wrong in compliance that you just didn't know about because compliance is a separate department from accounting many times. The more we can do during preliminary and compliance in this season, October through December, it really does help January through March. It speeds up the issuance process of the audit. It prevents surprises. We can have discussions now. Then, of course, everyone's favorite part is fieldwork. That's really what happens January through March. We schedule you to a week of fieldwork or 2 weeks, whatever is best. And that's when we're either at your office or working remotely from our office. And we've specifically set aside our time for you during this time. And then there's the fieldwork wrap-up stage. This is after those weeks that were scheduled. This happens behind the scenes primarily at Richey May. This is where we wrap up any open items. We finish drafting the report. The file goes through a manager review and partner review. This is for quality control, making sure that everything that needs to be addressed is correct. Then once it's gone through all of that process, we then send a draft for review. This is where management gets a chance to look over, make sure everything is correct. The financials are the responsibility of management. This is a very critical point for the audit. Then after we get your feedback, we will then be able to go through and finalize the financial statements. This is the point where you're probably thinking, hallelujah, we're done, thank God. But then you know that tax is going to talk to you, or we're going to be talking to you in 2 months from then starting planning. So I know you never feel like it's over, but we can all do a little victory dance at the finalizing financial statement stage. So during the planning stage, this is really where we're gathering a lot of information. And so what I'm going to put up on this slide really is expectations. Basically, this could boil down into a timeline. And we suggest that you talk with your audit team so we know that when you would really like your financial statements issued. We all know that we all have the same HUD deadline, but there's many times there's another deadline internally for other reasons, whether it's to get tax returns done or because vacation schedules, that sort of thing. So it's really important to talk about the issuance date that's requested. And then once we know that, we can work backwards, making sure that we know when the draft should come to you, when you should have your PDC letters, that sort of thing. So I encourage you to have these discussions with your audit team and be very open with us about deadlines, about vacation schedules, etc. During the planning phase, we will have lots of questions for you, but we also want you to have questions for us. We want to know what's going on. If you have anything that's concerning you, anything we can help with, this is the time to talk about it. We also want to talk in the planning phase about what's best for you. Not everybody works the same way, so where one company may really enjoy having a daily phone call catch-up, another company just really wants a daily email update. So let's work together, talk about that, so that we can meet your expectations and work through this in a way that is less burdensome to you. Other items that we can talk about in the planning phase, these are really discussion starters, and these are questions that your audit team is going to ask you. These are the areas that we typically find are surprises if we're not talking about them in planning. We get to final field work, and this is really where surprises come up, changes to tax implications come up, audit adjustments. These are the things that we want to prevent from being an urgent surprise come March. So we really need to know if there's any MSR sales. Those are things that affect both tax and audit. We can work together on that in the planning phase. If there's been any acquisitions, if you began hedging or servicing, that does significantly impact the audit approach and what we're going to request. It's important that we talk about that sooner than later. Kind of jumping around any changes in key personnel. It's great to know if you've had additions to your accounting staff, if there's changes in your compliance team, anything like that, because we really work with so many people at your company that it's important for us to know who's going to be there, if it's consistent with last year, or if there's going to be some training on our end about what we need and what the timing looks like. Another slide, you can basically have these as like a little checklist as you're going through things with your auditors. We also want to know, how's your production year to date compared to last year, and how do you think it'll look when you get to year end? What are loan margins looking like? We would like to know if there's new warehouse agreements, any new debt or banking relationships. Basically, you can take this list and know that your audit team is going to ask you these questions every year. So if you have this list handy, even in the back of your mind, it'll help you to set aside those kind of documents that we may need, or just bring these up to us. You don't have to wait until a planning phone call either to bring these up. So if you had something really significant change, if you've got new agreements, we would really love to know about it as soon as you enter into it. So why now? Why is now so important? Why are we having this conversation now? Why is your audit team and tax team reaching out now and making this such a big deal? We all know that you're busy. We know TRID is coming out. We know there's always something happening. But this is a really, really critical time for us to make sure that the audit and tax goes well. Right now, you have the undivided attention of your audit and tax team. This is, it's not our slowest season, but we aren't in busy season. So now is the time that we can really set aside time to research what's going on. We can work with you, talk about the implications, and we also have a chance to change things before year end if it's not going to lead to a favorable result, or if there's something that just would work better, we can talk about it now. We have the resources to address any new or complex accounting or tax treatment. It does take some time for us on our end to work with all of our resources, work with the tax team, audit team, business advisory to give you the best answer. So working through it now really does give you and us some lead time to get the right answer. It prevents surprise discussions and audit adjustments. Many of you have probably had that experience where it's the last day of field work and your audit in charge or manager comes in and says, okay, well, we came across this today and it's going to be a $2 million adjustment, and you're thinking, oh my gosh, I can't believe this is happening Friday of the week you're here. Why didn't I know about this sooner? We don't like having those discussions either. We don't want it to be a surprise on either end. So we can work through it now and make sure that it's just a little bit easier of a conversation, being proactive than reactive. We want to encourage you, don't be afraid to speak up. We want to know what's new and exciting in your business. We enjoy working with you. That's why we keep the relationship, and we want to know what's going on. We want to be an advisor. So now that we're in the planning phase, wanted to talk through best practices that really make it a success. We recommend using your current month-end closing schedules and reports to prepare an audit package. We're basically generally not asking for things that you don't already do on a monthly basis, but it could be that you haven't retained it, or we want it in just a slightly different format. But if you can start with what you do on a month-end schedule, it could be a great way to lead into the request the auditor is requesting. The next thing is, make sure the detailed schedules are reconciled to the general ledger. That is the very first thing your auditor is going to do. Make sure that the listing ties to the general ledger. If it doesn't, we send it back and ask questions. So you can save yourself some time and back and forth by double checking it before it's sent off. As I said before, keeping in contact with your audit and tax team is really a critical key to success, not only in the planning phase, but all of the phases. We recommend keeping an audit folder throughout the year where you keep copies of important documents. So if you just set aside a folder, and anytime you get a new lease agreement or a new warehouse agreement, debt agreement, etc., make a copy, put it in the audit folder. You know we're going to ask for it. It just really helps you have a collection of items that you know we're going to ask for. I recommend keeping this bullet point list perhaps in a document in that folder, so you're reminded of all the documents that we are going to ask for. And note, some of these things are compliance related, so any HUD indemnification request. It also helps the audit financial side, but we look at it on the compliance side as well. The QC reviews and reports, those are important. We look at the monthly and quarterly report. So now that we've gone through planning, that's us gathering information. Now we enter the preliminary fieldwork stage, and this is really the time that we get ahead on the audit. It can sometimes feel like, oh my gosh, I'm going through 2 audits. You come in the fall and you look at stuff, and you come in the spring and you look at stuff. But I promise you, we don't double up on things. This is really how we get ahead on the audit. So in the preliminary fieldwork stage, we can begin testing significant transactions. Sales of MSRs are always a big deal, and we like to look at those ahead of time, making sure that the journal entries were recorded correctly and that we understand all of the pieces of the transaction, since they can be very unique. We can also look at fixed asset transactions, loans held for investment in REO, material prepaid accounts that will remain at year-end that won't be fully amortized off, any significant equity transactions. We'll look at your legal detail and have discussions about any litigation that's going on. As I said, we're not going to test everything twice. We're going to come in and look at things through a certain date, typically through 9/30. And then once we've looked at that time period, we don't have to go back again. So when we get to year end, for example, on fixed assets, we're basically looking at the last 3 months of the year. It really does speed things up. But it also gives you a chance to have a better understanding of what sort of information we're looking for from or what we're looking for from you. So if you give us a fixed asset listing and we say, hey, it'd be really great if we could see the date and who we purchased it from and what it is, what category, it gives you a chance to recalibrate your report, reset up a schedule, so that when we come to year end, it's in the format that we're looking for. It speeds things up. During preliminary fieldwork, we also have some discussion items. We will want to review a draft of the financial statements. This is where we can look at the new wording that's come out, making sure that you agree with the categories that are on the face of the financial statements. We'll have last year's numbers in there if we're doing a comparative presentation. It's just a great chance to look at things, knowing that if we go through it and approve the draft now, when we come to year end, hopefully the only thing that changes is that we're dropping in the year end numbers. It gives you a little bit of a head start. Instead of reviewing this March 25th, you're reviewing it now, knowing that everything was locked and loaded and you're just checking numbers when it comes to March. Another thing that we do is we are required to interview certain personnel about fraud risks, any fraud going on in the organization. That's something that we can take care of now. It's a great time to revisit the timeline and deadlines. If something has changed, we maybe talk to you in August about planning, and then we come to preliminary fieldwork in November, and something could have changed. So please revisit the expectations and the deadlines to make sure we're all on the same page. And then confirm the final fieldwork dates. Just reconfirm that we'll be on site, if applicable, during these days. Make sure that you know when we're coming in, when we're leaving, so that you're able to set aside that time and we're able to confirm and schedule our travel arrangements. This is also a great time to talk about the results of the compliance testing. Sometimes this, again, becomes like, oh, we just have to do compliance, and we kind of forget about it because we're more in the financial world. But compliance is such a huge part of it, and there can be management letter points, there can be findings, there can be just general suggestions. So I encourage you to make sure that you're asking about how those results came out, and we'll be proactive about communicating that to you as well. Compliance testing, I just wanted to come back to this, have one slide that gives you some best practices for compliance. It really is a significant part of our audit, and there's a lot that we request from you all. To make the process smoother, be sure to review the request listing as soon as it's received and assign out the request to specific individuals. More than likely, the entire list is not going to be done by one person, so it's great to disseminate the information as soon as it's received and share that responsibility. If you have any questions, problems, or expect delays, please contact us immediately. We do schedule compliance just like we schedule your final fieldwork, and so we have one person dedicated to your compliance. And so if something needs to change, we have to reschedule our resources. So it's important to let us know as soon as possible so that you do get a dedicated person in a time frame that works best. Be sure to schedule a time to talk through the request with your compliance team member. Some of the requests can sound vague. It's, maybe your first year working with us. It's great to have us on the phone and we can explain what we're looking for, hopefully speeding up the process on your end. You're not having to guess. One of the most important things that we can ask is that you provide HUD files with bookmarks for the various requested items. I know this can seem tedious on your end, but you know your files better than we do, and it really does give us an advantage when we're going through it on our end to have the bookmarks. It speeds things up, prevents questions that could be easily addressed by knowing where all the information is. Some of the requests ask for a lot of information. Be sure that you're answering all of the questions. And as I said, we have a dedicated person scheduled to you, so making sure to meet the due dates is really important for getting the work done on both of our sides, yours and ours. And just remember, as soon as we can work through the request, the sooner we'll be out of your hair. And I know your compliance people will really appreciate being able to get back to the work that they're actually, assigned to do, getting the loan files done. So we've been through planning, preliminary, and compliance. So now we get to the final fieldwork stage. This is really probably what you think about when you think about an audit. This is really when we're working dedicated on your engagement, sometime January through March. Typically we come out, but several of you have a remote audit where we work from our office and communicate electronically. Before we, I say arrive, but basically before the week you're scheduled, these are the critical things that you can do to make sure that it's a success on both ends. Schedule a time to review the request letter with your audit in charge. Really, the earlier the better, but no later than 3 weeks before you're scheduled, because it's going to take you some time to pull together the reports and some things we need in advance so we can make selections and have time for you to pull them and provide them to us. The number one key to success in this phase of the audit is providing all the requested schedules, reconciliations, etc. in advance and by the due date. We give you these due dates because we know how the audit process flows on our end, and when we give you a date, we know that if we get those requests, we will have time to pull listings, look at things, and get a head start, and make sure that we have the information we need. Also, your audit team is going to probably need to work with other people other than the accounting department. This could include your secondary marketing, the compliance manager, human resources, etc. So we ask for your help in making sure that those individuals have time for us, helping coordinate schedules. It really does make a difference if we can have those scheduled and know that we're going to talk to somebody. We can be prepared for that and use their time very wisely. Also during final field work, other keys to success is communicate any significant open items at the beginning of the week. So we're keeping track of what you've provided and what you haven't, but just having an open dialogue with us saying, I know that you're waiting on X, Y, and Z, I should have it by Tuesday, etc. will be really helpful for us to know what the timing looks like. Providing all the remaining requested schedules and reconciliations during the week that final fieldwork is scheduled. This is absolutely critical if we're going to be able to meet your deadlines. We need all of the open items and the originally requested schedules during the week we're scheduled. Again, this is our dedicated time specifically for you. And then once we're out of fieldwork, we're pulled in a lot of different directions, and it does slow down the process. We do recommend scheduling a daily status meeting with your in-charge, your audit in-charge, to discuss what's open, if there's been any audit adjustments identified, any other questions or issues that you may have or we may have, any recommendations we identified in the audit process. So this could be something as simple as like, hey, I just wanted to bring this to your attention, or it could be something that we're planning and writing up in the letter to the board. These are important to know soon in case we have misunderstood something, we can straighten it out. And it's also great to talk about the priority of open items. You could have a list of 20 open items and you don't really know where to begin, but we have an idea of what we would like first, so it's great to talk about that daily. Other keys for making this a really smooth process is to use your current year-end close schedules and reports when you're preparing the audit package. No need to duplicate work. Really use what you already have and build it up for the audit. As we talked about on compliance, same thing with the audit request list. Assigning this out to who's responsible can help leverage work, help make sure that everybody has time to prepare. And we also recommend that you keep a log of the date the request was provided to Richey May and the name of the file. Files are flying around every different way. Sometimes it's getting emailed, sometimes it's on the portal, sometimes we overlook things. And it's great if we can say, hey, I don't see this on the portal, and you can say, oh, it's this name and it was up on this date. It really helps us sort through the data. There's a lot of data on that portal, and we can easily lose one simple request in the mass of information. And just like we talked about in preliminary fieldwork, it's great if you keep using that audit folder between preliminary and final to keep a log of all those documents that we're looking for, warehouse agreements, any stock agreements, etc. So next phase is the fieldwork wrap-up stage. This is done, again, behind the scenes. This is your Richey May team working out, basically not on site. This is typically performed a week or two after final fieldwork is completed. This is us wrapping up some loose ends, getting it through manager and partner review. So remember that the sooner your audit team receives open items and requests, the sooner we can get out of your hair, back to your normal day job. We highly recommend do not adopt an out-of-sight, out-of-mind approach. This very, very quickly derails any progress that you would have had. It could have been a successful audit, and then as soon as we leave the field, if we're unable to reach you, it really does delay the process. Be sure to schedule time to review the draft of the financial statements and the letter to the board internally. Make sure that any interested party on your end has time to review these in detail. We want your feedback. These are your financials. We ask you to own them and own the process and have the conversation with us with any feedback. So again, the key to success is communication and preparation. We know that you're busy. We understand, but remaining in contact with your audit and tax team from now until the issuance of your financial statements is really critical to the process being smooth for both of us. We ask you and encourage you to be prepared for the week you're scheduled for preliminary fieldwork, compliance, and final fieldwork. We've carefully selected the weeks for your audit based on your preference. We've carefully selected your team as well. So it's very important that we're meeting those expectations. Remember that when your team is scheduled, you have our undivided attention. Make sure to use the best of that. And it really is imperative that you're prepared for the week that you're scheduled. If you're not, again, it comes back to communication. Please let us know that you won't be ready, and we will do everything we can to work out a best case scenario from that point. I will open it up to see if there's any questions, but again, I recommend taking these slides and highlighting the things that are key points, key discussion points, key things to keep on hand, and make that your new go-to list when anytime you're thinking about the audit. Any questions? All right, that is it for me on the audit side. I am going to hand it over to Gina. She'll talk to you about key things that are important on the tax side of things.
Okay, well, Natasha did a fantastic job on all those details, and the nice part for us on the tax side is, you know, we really are able to really jump off from where the auditors have a starting point. So I think even more from that perspective, it's really critical that your audit and tax team, as well as you and your internal teams, work together as much as possible. That, I think, couldn't be more critical. But for the tax side, what we wanted to talk about similarly were some of the concepts just about how to have a successful tax return preparation season. And now some of the things that you really want to consider, it's a whole year perspective from tax, so keep that in mind. But here's some of the high-level views to really have a successful season, to avoid that kind of out of sight, out of mind mentality that Natasha mentioned, as well as to help each other have a successful season. So the first one is really just to consider having proper year-end planning for the spring return preparation season. And this is critical to identify some of those new transactions and new accrual items, things that come up during the year. We can do that really early on. Also understanding and discussing the timeline for the return and the schedule for the calendar for that product delivery for you guys. So some of the things that you want to think about in that area are understanding your needs and kind of thinking about whether or not you'll be extending returns or filing timely. Again, you want to work together with your audit team, both Richey May and your internal teams. Again, that's really critical. And then looking for ways to streamline the return process to better align with your internal resources and gain efficiencies. This is looking for weaknesses or bottlenecks. We do this as well at Richey May here to make sure our process is smooth as well. And again, the continual communication and status updates are important. This really works through, you know, status updates either weekly or daily. This keeps the process smooth, provides for the opportunity to ask questions. And then lastly, just from a high level, is making sure you're allowing sufficient time between document delivery, which is the information you're providing to us, to the actual product delivery, which is the return getting delivered to you all. You know, keep in mind that the tax return process is not quite as structured as the audited financial statement process, and the return can look quite a bit different from year to year. So it really just depends on the types of transactions you have going on during the year. And to Natasha's point, you know, having those documents in a central location that you can update kind of ongoing throughout the year so that they're really handy, it is a great mechanism to facilitate having all that information readily available. So I think we'll go on now to some of the more detailed items. So to first talk about year-end planning, you really want to consider a formal year-end planning call with your Richey May tax team to go over current tax updates that may affect your return filing. One of the biggest items you really see year to year is the bonus depreciation extension option. Unfortunately, the IRS has not yet extended this particular item for 2015. So we'll definitely keep you all updated as any changes occur there. Last year they didn't extend that until December, so keep in mind it can be actually quite last minute, unfortunately, but we'll do our best to relay that as soon as possible. You also want to work with your Richey May tax team to prepare a year-to-date taxable income projection. This can either be done through a separate projection analysis if you have a specific point in time that you want to look at, or we can work it in with the Q4 estimate calculation, which a lot of the time we're doing for you all anyway for potentially state estimated tax payments and or related shareholder or partner estimates that kind of relay off of the entity information. So with this process of looking at that year-to-date information, you really want to look for any new accruals that may have a tax impact. And some of the other items that can change significantly year to year depending on your taxable income is your state tax expense. And the process there is really to look at whether or not those items have been recorded properly. And it's best to just do it early on. And if we can do that before year end, that's great. You guys can get that cleaned up and in the proper buckets early on in the season. You can also evaluate your year-to-date loan production activity by state. This will really allow you to understand kind of where your state apportionment will end up for the whole year. It lets you know if there's any new state activity or if you have any new licenses. This can really impact your state filings, so this is really important to do early on. It also eliminates surprises when we get into the actual spring season and are working through those state returns. One of the biggest items I think we find on the tax side in this year-end planning process that's really critical is working through the fixed asset year-to-date information. We find when we get to the return process that there can sometimes be differences between the audit roll forward and what we would have as the tax fixed asset roll forward. Sometimes we need a little bit more information than what you guys may gather for the audit process. So just keep that in mind. That's one of the reasons we like to do it earlier in the year, kind of before the January season picks up. Some of the items to consider in that process relate to some of the new repair regulations that came out and were effective for January 1, 2014. So a lot of that really related to asset improvements, as well as the de minimis safe harbor election. Those items really allow us to look at your full asset list and see, are there things you've capitalized during the year that maybe you can actually accelerate and currently deduct for tax purposes? Keep in mind that we do have to also follow GAAP, and so to the extent there's a materiality concern of writing off certain improvements or repairs, we really want to work with your audit team as well to make sure we're all in agreement that it makes sense. There's also an item here to really discuss the intent to add significant asset additions before year end during this year-end planning process. This will allow us to really help you identify concerns, especially regarding tax extender bills such as bonus depreciation, because that can really change your initial year tax depreciation expense, sometimes for the better if they do extend those bonus rules. Much of the listed areas can be tied out, say, as of October 31, and then that would leave just a small portion of the reconciliations to do after year end. This really does increase the efficiency during tax season, although unfortunately for the tax returns, we can't use all information as of October 31, obviously, if you're a calendar year-end entity. But it does help in certain areas that we've discussed here, such as fixed assets, loan production, et cetera, to give you a pretty good idea and a pretty sufficient data set to look at for issues and reconciliations. So additional items would also include early review of any deferred compensation structures or plans to facilitate proper tax deductions. As listed here, a really great example that applies to you guys are branch manager bonuses if that's your structure. We really want to get you the most tax deductions where possible and to the extent that obviously the law allows. But there are certain areas that you can plan for, and this is a big area that can impact your tax projection and or taxable income when we get to the actual returns. So definitely have those discussions early, even if you don't do maybe a full year-to-date tax income projection. In addition, you want to review significant transactions that occurred or will occur during the year. I know Natasha mentioned this. Again, having these types of documents in a central location is great, but some items to consider are trade or business asset acquisitions or stock acquisitions. There are some additional requirements for tax purposes on reporting those, so we definitely want to know ahead of time if possible It really does help us look into any issues that come up related to those transactions. Another big one we see is MSR servicing portfolio sales. Whether you're selling your whole portfolio or just part of it, this can really significantly impact your taxable income. So we want to talk about that early and often. There can also be some possible valuation needs for the tax treatment. So keep that in mind, that can add a delay in the time of the delivery of the actual returns on the back end, just because we're dealing kind of with some other third parties typically in that process. And another example is just investor settlement agreements. This would be if you have any outstanding loans that they're requesting payment for and you come to a determination and agreement to settle for those. We do want to know about that early. Having those typically written and signed by 12/31 is key in allowing for a certain portion of that to be deductible in that tax year. In addition, you want to review changes in ownership during this year-end planning phase. This especially is important for S corporations. You want to make sure you're looking at distributions because they can be affected by changes in ownership during the year. For partnerships, it can also potentially impact, say, technical termination or other reporting issues on the return. So knowing about that early and ahead of time will not only identify issues, but especially in the case of a technical termination, will allow us to properly plan for any potential short year returns that might be needed. You also want to consider any sales that would cause gifting or basis issues. Those are important as well because they will affect potentially the shareholders and or partners. Kind of lastly, in the year-end planning process, you do want to review your related party transactions. This is similar to the item Natasha discussed as well. This is just to help us identify if there are any items that we need to be concerned about on the tax side. Not always is this a problem area, but sometimes there are things that come up that can affect the tax return. One of the items we see most often is probably partner or shareholder debt with the related entity. So we want to make sure everything ties out and reconciles, as well as consider the self-charged interest impact to the partner or shareholder, because that potentially could affect their individual returns. So we do want to make sure we identify that early on. So the next area I would like to cover here is really talking about what a tax return calendar looks like. First understanding that your audit schedule does affect the completion and timeline for your tax returns. I think that's important. Understanding that in relation to other needs that you may have in that area, whether it's partner or shareholder related or just maybe compliance. It's important to understand that. So you want to have those discussions about whether you feel that you prefer to extend your return or maybe you really prefer to file timely. There are a lot of different things at play in that area and making that choice, but understanding the needs is important to kind of start the discussion. So once you've kind of understood those areas, then I think working through the actual timeline of the preparation and tax return season with your tax team will be much easier. Everyone will be more on the same page and kind of understand the needs of everyone involved. So to the extent you will actually be extending your returns, we do still recommend that you set those document request dates and delivery dates during the January to April spring season. This makes sure that as soon as the March and April deadlines are passed, that we can really make sure we stay on top of your return and keep it moving through the process so that it doesn't push to the extended due date. And if you will not be extending but filing your return timely, kind of a similar process. You do still want to set those document request dates and delivery dates. It's important, I think, to also consider who will be working on those items, similar to how Natasha discussed on the audit side. But I think what's key in this area is to set these dates early. Set them in January so that you really have sufficient time to gather the information needed and meet the deadlines. So keep in mind, in addition, that the complexity of the return is a large component and driver of the schedule. So the more complex the return, the more likely having a detailed calendar will enhance completion and create sufficient communication early on in the process. So another big area, and Natasha mentioned this quite a few times, but communication is key. And so that's what we really want to stress in this area here. Not only understanding the tax timeline is important, but also understanding the resources involved, both internally and externally, when both the audit and return are supposed to be in progress concurrently. We find that there can be sometimes delays if there's questions on the audit side that maybe we can't proceed with the tax component until that answer has come back to the audit group. So we really do want to make sure that there's proper team coordination. And, a lot of the time here at Richey May, if they're in the office, it's really easy to go and chat with your auditors and say, oh, hey, how is that timeline going? But often they're on site. And so it does, I think, cause even more importance in the area of making sure everyone's staying communicating in a timely manner. In addition, you want to make sure you're setting communication leaders on your end to facilitate ease and efficiency of communication. We do this as well on our side to make sure you have a direct contact and a person that you can rely on to make sure you get questions answered and keep the process moving. In addition to that, not just having maybe a communication leader, but you may also want to internally set some guidelines on who will be doing what parts of your tax engagement, as far as maybe document requests or questions. Sometimes that's the same person, sometimes it's not. So just understanding what your resources are and assigning those early on is really helpful. In this area, we look for ways to gain efficiencies and reduce back and forth on documents requested and or questions that come up. So this is really helpful if you can do this, similar to the audit process of having those designated resources. Also, assigning responsible parties for request items creates much more efficient tracking and delivery date management, and it also helps get questions answered more efficiently during the process. Another important area is committing to document delivery dates, or if you've committed and realized, well, that due date isn't going to work anymore, communicating those early in the calendar when changes are needed is really important. We're more than happy to realign the timeline as long as we have sufficient time to make sure we can meet your needs and it works with the resources as well. As Natasha mentioned on the audit side, we also on the tax side would like to prefer to set up status update calls daily. Now, that's not necessarily as critical. Maybe weekly is more appropriate for the tax return. It's up to you and what your needs are in that area, but it does help keep the calendar moving, keep the discussion of timing and open items kind of in your current mindset of where are we today. And then lastly, you do want to try and set aside some time to review the finalized return and go over any questions during that kind of final return completion phase. What I recommend in this area is kind of understanding your full calendar of when you're going to be expecting that tax return to be delivered to you for draft, so that you can plan either a couple of hours or maybe it's a very complex return, a day, something that meets your needs, and really putting that on your calendar early on in the process to plan for that really helps keep the process moving. In some cases, establishing a combined audit and tax calendar for milestones can be critical to success. In smaller returns, maybe it's not as important, but we see for a lot of our lenders that there's a lot of complexity there, and so this really just enhances the process. some of the things to think about in the communication phase is just understanding the tax timeline and what that looks for you. So, you know, similar to the audit, we do have some stages, but they're much shorter in the timeline, and typically it's much more efficient to talk about it early. So to give you some thoughts on that, we have typically a document request where that's delivered to Richey May, so we would plan that on the calendar. We'd also have set aside a date typically for Richey May to provide questions back to you on either the PBC documents or other questions that come up on the balance sheet. Typically then it'll move into preparation completion, and from there into what would be a detail review phase. So that's typically at the manager level. From there, there can sometimes be additional questions and or changes that come up. So in that process, keep in mind that in the team coordination and communication area, there may be some back and forth in the process of the return. From the detail review phase, it'll then go to our technical review, which looks really at a high level to see what types of important transactions occurred or new tax laws, as well as just looking for overall correction. So it's a collaborative process, and we do want to discuss the returns with you. So that's why we really recommend setting aside that time to review the final return once you receive it. So I think the last section here is just some tax season tips. A lot of these items are similar to the year-end planning process for tax purposes, but we felt it was important to kind of reiterate that just because you do a year-end planning, either taxable income projection or other analysis, that we do still need to consider during January to March and or April that there are some things we can do early on in the process, and so we wanted to make you aware of those. So some of the things that we recommend to you in providing documents to us early in the season, whether it's January or if you're extending, maybe that means May or June, to facilitate utilization of tax members, as well as a means to keep the preparation moving and meet deadlines. Some of the items include state apportionment information. So this can be loan volume by state, loans held for sale by state, UPB by state, as well as fixed assets by state. That would include cost and accumulated depreciation, as well as rent expense by state and payroll by state. So again, if you previously provided some of this year-to-date detail in year-end planning, it's possible you may only need to provide a final few months of information to get us kind of the full year picture. In addition to the state apportionment data, we also want to get a full picture of your fixed asset roll forward. So this is where if we've already reconciled, say, through October, you know, we only have 2 months left to kind of review and reconcile, makes the process much more quick to get through. But you do want to consider including proceeds received on any disposals. In addition, if you had any purchase agreements for acquisitions, we'd want to make sure, if we weren't previously notified of those, to get those early in the process as well. Again, that would typically be any asset purchase agreements or stock purchase agreements that you might have. Typically, there are some additional tax research items that would be included in that. In addition, you'd want to consider any additional changes in ownership. If you've already provided some of that in the year-end planning phase and there have been no other changes, then this may not be an area that you need to do anything else with. But just keep in mind that sometimes you'll have multiple changes during a year, and so there might be some that occur towards the end of the year. As well, having those significant transaction items readily available is also key during tax season, not just year-end planning. So again, those MSR servicing portfolio sales and evaluation needs in that area is important. If the earlier we get this type of information, the more likely we are able to give you sufficient time and analysis to really help get you the best tax result. We also would want to consider if you've had any entity conversions or technical terminations. And sometimes there's other areas that come up that you may not think of now, but if there's a question, let's talk about it early. It's better to ask, even if it's maybe not applicable at the end of the day, to say, hey, is this going to impact the tax return? Let's talk about that early. So keep in mind that the challenge of the tax return is that we aren't actually able to use partial year information, unlike some of the compliance areas that the audit group can. So this does limit the type of work we can do early in the year. However, there's a lot that we can do. And as we mentioned, some of those areas in the previous slides. So please keep those in mind as you go through your year-end compliance phase, as well as your tax planning phases here coming up. These tips are a great way to succeed during season, and so we really just want to again highlight that communication is really key, and we just want to make sure that expectations are met and all delivery items are to everybody's satisfaction. So that was really everything I had today. I don't know if anyone has any questions.
Well, it doesn't look like there's any questions, but it doesn't mean that if you guys have questions afterwards, you can email us or your manager, you're in charge, and we'd be happy to answer them. I want to thank Natasha and Gina for developing and presenting today. I thought they did a great job, and we're hoping that you guys found the information valuable and informative. And also thank you guys for attending the webinar today. I know your schedules are busy, especially with everything that's going on in the industry and TRID. So again, if you have questions, feel free to reach out to us, and we'll get back to you. And as we are always trying to provide topics that are timely and informative in today's environment, we welcome your ideas for future topics and webinars. So if you have any ideas or areas that you'd like to see us cover, feel free to email us at info@richeymay.com, and we'll take those into consideration, hopefully build them into future webinars for you guys. So with that, I know we're coming up on the time here. We're a little bit over. Again, thank you all for attending, and have a great day.